Good evening. It is our great pleasure to bring to you this investment report on MTN Group Limited, a mobile telecommunications company. This is the story about sustainable growth within Africa, bringing investors stability, durable cash flows, and potential in abundance. Representing the team from South Africa here tonight, we are shown above the sections that we'll each be covering. You can follow our presentation on the ribbon on the bottom of our slides. My name is Benjamin. I'm going to take you through MTN's highlights and do a brief company overview. We recommend a strong buy on MTN with a target price of R215.35. This is up from an analyzed share price of R177.57 as of September last year. Our presentation does contain updated market information from that point, which further supports our recommendation. MTN is a growth stock with attractive dividends that offers a defensive entry into Africa. And the diversity that the group enjoys has resulted in stable and robust earnings. But before we continue on our recommendation, allow me to put the company in context. MTN's core value proposition is threefold in that it offers voice, data, and ICT services. These it offers to both prepaid and postpaid or contract customers. With a market cap of 360 billion rand, MTN connects over 100 million mobile subscribers, 42% more than its closest competitor, the Vodacom-Vodafone Group. Revenue is driven by ARPU, or average revenue per user, and subscriber volume. MTN has an emerging market focus and currently operates in 21 different countries. Its strategy, which has proven very successful, is made up of 4 key points, namely the growth of subscriber numbers, stability of ARPU, capitalizing on growing data demand, and most importantly, increasing and maintaining their network quality. Lauren is now going to take you through the industry and competitor analysis.
Mobile is an enabler in Africa's economic growth. 20 years ago, mobile and internet penetration in Africa was almost zero. Fueled by mobile networks like MTN, mobile penetration is now 67%. Smartphones outsell PCs 4-to-1, and in countries like Uganda, there are more mobile phones than there are light bulbs. This makes Africa the second largest and fastest growing mobile market in the world, an exciting prospect for MTN. As the telecommunication industry matures, subscriber growth slows and margins reduce. This industry life cycle shows that MTN is experiencing varying degrees of this maturation in the different markets in which it operates. The OPCO cluster is driven mainly by Ghana and Iran. Low mobile and internet penetration give the market room for growth despite exposure to political and operational risks. Nigeria is a key growth driver for MTN, as it is one of the fastest growing economies in Africa. Increasing subscriber and penetration growth mean that the market is ready for sophisticated data products, and MTN hopes to improve its network quality. South Africa is the most mature African market, and as such is under pressure from lower margins and reducing subscriber growth. MTN therefore hopes to focus on cost efficiencies and maintaining its market share. In South Africa, there is strong rivalry, particularly with competitor Vodacom, part of the Vodafone Group. In other operating countries, MTN has aggregated market dominance due to its competitive advantage. Favorable to MTN are high barriers to entry, as shown in many African opcos, where MTN enjoys economies of scale. Furthermore, MTN has strong brand power and an emerging market focus, which position it well to take advantage of new trends. Sam will now discuss the financial analysis.
MTN revenue is made up of many different products, including call, mobile data, and interconnect. A number of different factors, including decreasing rates, intense pricing competition, regulatory restraints, and economic risks, have put downward pressure on revenue growth across all operations. However, MTN's exposure to high-growth markets, strong subscriber growth, and in particular the acceleration of mobile data, have offset much of these downward pressures. Mobile data is fast becoming a main driver of group revenue, and with over 80% of internet connections in Africa being mobile, there is this huge potential for growth in the area. Core to the financial strength of MTN is the Nigerian operation, which remains the largest contributor to group EBITDA. With 3 times the population of South Africa and half the mobile penetration, the potential for growth in the region is immense. Nigerian margins have been historically high, and we expect these margins to remain high due to limited price depreciation and already low mobile rates. While there exists significant risks to operating in the region, MTN's position MTN's position as a market leader leave it best poised to weather many of these storms. Cash flows have been significantly affected by increased capital spending and changing dividend policy. Dividend policy recently shifted from a payout ratio to one of absolute growth, while capital spending in Nigeria and much of the large OPCO cluster is expected to continue as MTN looks to solidify its position as a market leader. With cash flow realization historically above 1, the quality of earnings remains substantially high. Net profit margins have consistently been about 18%, and these are expected to increase due to MTN Nigeria's increasing contribution to net profit and the decrease in contribution of the lower South African margins. Asset efficiency and leverage multiples have not affected ROE materially, but have been the result of changes in current assets and cash balances. In the medium term, we expect ROE to increase due to sustainably high profit margins and cash balance deterioration slowdown. This could leave ROE as high as 25% in the foreseeable future. Alistair will now discuss the valuation.
We elected to use a sum of the parts discounted cash flow valuation methodology due to MTN's diverse organizational structure comprising numerous operating areas and their respective risk and prospect disparities, such as level of mobile penetration, regulatory risk, sanctions, and economic growth prospects. Contributing further to this were MTN's lack of directly comparable companies on which to conduct a relative valuation, as well as MTN's remarkably strong cash flow generation. Here we put the valuation under a microscope. For each operating area, we have an applicable discount rate, terminal growth rate, and intrinsic value. At a listed price of just over 177 Rand, we find MTN to be a strong buy, trading at a substantial discount of 21.3%, and this is with Syria included at a value of 0. The WACCs were calculated as follows. South Africa's cost of equity was used as a base, onto which a corresponding country risk adjustment was made. Individual costs of debt were then combined with adjusted cost of equity at the optimal capital structure ratio. Finally, a relative quality adjustment was made to Nigeria and the other operating countries to reflect the quality of MTN's operations over other non-investment grade firms. A qualitative 4-factor model was used to predict growth in perpetuity. We analyzed IMF data for GDP and inflation forecasts, company-specific factors, and levels of mobile penetration to synthesize what we felt was a prudent and effective growth rate for each operating country. This football field shows the reasonability of our valuation result by plotting 2 relative valuations on competitors Bharti Airtel and Vodacom, a dividend discount model to reflect MTN's recently changed dividend policy, as well as a bull and bear case scenario analysis. Appealingly, sensitivities to MTN's key markets, South Africa and Nigeria, showed limited downside sensitivity to intrinsic price. Monique will now conduct the risk analysis.
We analyzed MTN's most significant risks in this risk matrix. High levels of competition is a market risk which leads to ARPU, revenue, and margin pressures. MTN operates in emerging markets, which include specific challenges such as a shortage of skills, unstable economies, political pressures, and challenging levels of inflation. Increased regulatory requirements have a negative effect on MTN's market share, revenues, and MTRs, and are particularly relevant in MTN's largest operating countries. The impact of US sanctions on MTN's operations in Iran and political instability and civil unrest in Syria continue to be challenging. Now, in order to get a balanced view of the uncertainty in MTN's value, we must weigh these core downside risks against core upside risks, which we have identified but not included in the valuation. The possible normalization of business operations in Iran and Syria holds upside potential for MTN in future. The MTN brand is one of the most valuable and recognizable in Africa. MTN is constantly working on innovative product offerings, such as MTN Play. The MTN Group is in the best position to take advantage of potential M&A opportunities on the African continent, and MTN is well poised to take advantage of new markets within an African context. And now for some concluding remarks. As Alistair mentioned in the football field, we performed a scenario analysis on the intrinsic price in order to estimate the impact of potential changes in market factors. A summarized base, bull, and bear case is shown. We recommend a strong buy on MTN on the back of sustainable growth throughout emerging market operations, significant business and investment stability as a result of consistent performance,